Hey, what's going on, guys? So it is August 8th, Saturday again, and we're going to go over a few things today. I'm going to take it back to basics, okay? So I'm going to take it back to I'm going to take it very slow and go through exactly how to sell a call option and how to sell a put option, all right? Had a person asking to take it kind of back to the basics, and so I'm going to go over that pretty slowly. We had a great week in the market. Oh my gosh, I mean, the S&P 500 was up like over 3.5% for a week. 3.5%. The average for a year is around 10%. Okay, so 3.5% for a week. So that's my 401k is loving that. So that was great. I mean, the oil's down a little bit, about 2 points. 85% of the S&P 500 stocks have beat their earnings so far. So, I mean, the market's doing really good. Hopefully it keeps going, but you know how that goes. You know, if it goes up that much that quick, people are going to take their profits and there might be a dip back, which will probably happen. But, so kind of expect that. Maybe. We'll see. We'll see what happens. But let me go down to the spring here in my neighborhood. That's where I'm walking right now. And we're going to go over these put options and call options. And this week, I did sell two call options on TQQQ. So later on in the video, I'm going to go over that with you, and I'm going to show you in real time with my options, my real money, exactly how I did that with the call option. And plus, like I said, I'm going to go over the put options also. So you're in the right spot if you want to learn how to sell these options. I'm going to go down here, find a spot, and we'll get to it. All right. All right, guys, so I made it down to the spring in my neighborhood. Got some people hanging out down here. It's pretty nice to have this like 3-minute walk from my house. So it's great to come down here on the weekends and stuff. So I found a spot over here, and I'm going to go over everything with you on these options. Selling cash secured puts and selling covered calls. Cash secured puts is you have the cash to buy the shares if you have to buy the shares. You might have to buy them. It's not just collecting premium, but you might have to buy the shares with the puts, and on the calls you might have to sell the shares. So I'll show you all that. So we're going to start off with the puts. Okay, so you got to have the cash to buy 100 shares of the stock that you choose. So number one thing is you want to do some research on the stock that you're using. Check the earnings. Go to, like, I go to Yahoo Finance. I check the earnings. I check the debt. I make sure they're beating their earnings. Most quarters it'll show all that. It'll show the earnings, all the profits and everything like that. So you want to get a stock that you like and you think is going to go up long term. Everything's going to, you know, dip down and go up. It's going to go all over the place. But long term, as long as it goes up long term, that's what I look for. Okay. So we're going to go to my Charles Schwab app, and I'm going to show you exactly how I would sell a put option right now. If you don't have the Charles Schwab app, I'm sure it's pretty much the same on different platforms. I'm not positive. I haven't been on them, but the Charles Schwab app works for me. That's what I've been using for a while now. So let's go to that, and if you have the Charles Schwab app, this will be perfect for you. Okay, yeah, see, my account's gone up quite a bit in the past couple weeks, or about a week and a half. I was at like 129,000. Now I'm at 137,000. So that's very nice. We've had 2 good weeks. So here's what we would do. You pick a stock, and now you go down to the trade tab right here, right there. Tap on that, and you go to the options tab. Make sure that is tapped. Okay, we're going to use Carnival Cruise Lines, okay? So we got Carnival Cruise Lines on here. Carnival Cruise Lines is at $28.98, right? So it's around $29, okay? So now we're going to go to the option chain. Let's go here, chain. So the option chain is the expiration date. The strike prices are in the middle. That's the price that you are willing to agree to sell your shares at on the calls and buy the shares at on the puts. You got the puts, see the puts on the right, you got the calls on the left. Okay, we're doing puts. So the first question is, you got to ask what price would you be willing to buy the shares at? Okay, so it's at around 29 right now. So I would say, you know, I'm going to buy it $1 cheaper. I want to buy it on sale, right? So I would go with the $28 strike price. You can pick any strike price you want. The closer the strike price to the stock price, the more premium you get. So the reason you get more premium is because there's more chance of it going what they call in the money. Okay, so on the puts, below your strike price would be in the money. When you're in the money, you might have to buy the shares. Okay, if it closes at the expiration date, close of the market, and it's below your strike price on the puts, you just don't do anything on the expiration date at the end of the market, it will buy those shares for you, 100 shares, okay, per option. Okay, and on the calls, if it's above the strike price on the calls that you pick all this. You pick the expiration date, you pick the strike price, what you're willing to buy or sell the shares at. So on the calls, if it's above the strike price, it will sell your shares if you don't do anything, okay, at the end of the market on the expiration date. Okay, so we want to sell a put. So let's go to that. We are choosing the $28 strike price right here. Okay, so what we would do, and then this is the premium. This is the money that will go directly into your account when you sell this. Okay, so the bid is 43 cents, the ask is 50. I always go in the middle and sell it this would be around $47 or 47 cents, I should say, but it's times 100 shares, which each option is 100 shares, so that'd be $47. Okay, that you would get, that would go right into your account, less the fees. The fees on Charles Schwab are 65 cents per option. Okay, so we would tap on that, and it goes over it with you right here. So it's sell to open, STO. There's different options. When you're selling an option, you always want to pick sell to open, okay? Sell to open. And then you have the strike price here at $28. That's what you're willing to buy the shares at, okay? You got one option. This is a put right here. And you got the expiration date of August 21st, and that's when this option ends, okay? So we picked the strike price, we picked the expiration date, and we would sell this option. It shows right here 43 cents, so it'd be $43 that would go into your account. Estimated amount $43, and it's estimated probably because the fees. Okay, you got 65 cents in fees per option. Okay, so you would collect, I would put it at 47 cents because that's in the middle. So you would collect $47 that would go directly into your account, and if by that expiration date, you got to watch it. If it goes below the strike price, like I said, you might have to buy the shares. Okay, there's ways around that, which I will show you. I roll lots of options. So on my account, on my videos in my account on Tuesdays, I'll show you how to roll the option, and I'll actually show you exactly how to sell a call option now. So on the call option, it's totally different. It's the opposite actually. So on the call, or covered calls, I should say. You own the shares, and I'm going to show you an example of this in just a minute. So on the call options, you own the shares, and you want to sell an option on those shares, a call option, covered call option, meaning you own the shares. Not covered, it would be if you sell on margin or naked, or not your money basically. So I don't do that. I do strictly covered calls and cash secured puts. So it's all my money. So here we go. We're going to go to sell a call option, okay? And then I'm going to give you an example, like a live, like real-time example. So we're going to go to clear, and we're also going to use Carnival Cruise Lines right here. Okay, and we're going to go to the same thing, same thing. Go to the option chain, and now we're going to go on the left-hand side. Okay, left-hand side is the calls. Okay, so I own the shares. Say I own the shares. It's at $29. What would I be willing to sell the shares at on this side? This side is buy the shares, willing to buy the shares. On this side, it's on the calls, it's willing to sell the shares. So you know what? It's at $29. I want at least $1 more. I would like $30. I would be willing to sell my shares at $30. Okay, so we come down here to the $30 strike price right here. $30. And also I'm going to show you a little something else too. So for the premium, the bid is 24 cents, the ask is 28 cents. What's the middle? The middle will be 26 cents. That's what I would try to sell the option at, 26 cents. Okay, so also there is something called delta, okay, and you can put this on your option chain. All right, so I'll show you. I have it on my option chain. I use it every now and again, and I'll show you that right now. And delta is the percentage of chance of this option going in the money on the calls, meaning above $30. If the stock goes above $30 at the close of the market on the expiration date, you would have to sell your shares at $30. Okay, so you're getting the premium and you're getting $1 more for the stock. Okay, so but if the stock does go to, say, by expiration, if it goes to $32, you only still get $30. That's the trade-off. Okay, so, and same with the puts. If say, what were you selling, the 28, right? If it went down to $27 at expiration, you would still have to buy the shares at $28. Okay, so there's where the little bit of a risk comes in. You know, you would be able to buy it cheaper, possibly, on the puts, and you would be able to get more money on the calls. So you're picking the strike price before the expiration date, so you're betting that it won't go below the price on the puts and won't go above the price that you pick, the strike price on the calls. Okay, so here we go. We're going to agree to $30 right here. The strike price, or the premium, would be around 26 cents. So you tap on that, and this says BTO, right? We don't want that. Remember what I said? Sell to open. We got to change that. So we sell to open. Sell to open. One option. Oh, we got to change the expiration date, right? We got to do it to the 21st. So all you do on this is tap that and pick whatever you want. So I'm going to go with the August 21st. And let's see, everything's right. Okay, the strike price is right at $30. These are calls now. So, oh, it's showing the bid and the ask on this. So the middle, okay, the middle on, because I changed the expiration date to the 21st. So you get a little bit more money, right? So we're getting 49 cents now, which is $40 or $49. Okay, so you would get $49 that would go directly into your account if it took it at that price. So it goes right into the account. So that cash is right into your, less the fees, like I said, but it goes directly into your account. So the good thing about this, I think, is the money is not in the stock. The premium goes directly into your account, so you have the cash. So you can use it for whatever you want. You can spend it on bills. You can just leave it in there, keep collecting premium. And this is what I do. And then when I get to a certain amount, then I can sell more puts, you know, and make more premium. And it's just a compounding thing, and it just builds. So that's would be the best bet. But if you're like retired and you have a good chunk of change in there and you want to just kind of like live off the premium, some people do that. You know, you got to be real safe about it though, because you might get into, you know, you might have to buy a stock at a certain strike price, and then what if it keeps going down? You know, that's why you want to pick a stock that's, remember, like I said, goes up long term. You might get dips, but long term. So you always want it to, you know, think it's going to recover. So pick good stocks. Do the research. Okay, so I would get $49 here in premium, and to sell that call option, and you just don't want it to go above the $30 strike price by the expiration date. So that's pretty much, you know, how it all works. You know, like, it's not that difficult. And oh, let me show you that delta real quick. Okay, let me go back to the option chain. Okay, so we'll go to the option chain, tap on that, and okay, loading option chain. I don't know why this is so slow. Let me try it again. Go to the option chain. Oh, here we go. So on that $30 strike price, if I slide this over, on the last row here, you got delta. Okay, so for that $30 strike price, it shows 34.34. You know what that tells me on the delta? that tells me that there's 34% chance that that will go in the money and you will have to sell your shares. And it's the same with the puts, but just reverse. There would be, whatever the delta is, that's the percentage of chance that it would go below the strike price and you would have to buy the shares. Okay, so that's a good tool to have. It's not always, you know, that accurate, but it's a good starting point, you know, something good to look at, you know, just another tool in the toolbox, you know. So on the, okay, so if we go over here, remember we were selling the, what, $28 strike right here, and that's 31.31, 31% chance that it would go in the money on the put that we were going to sell. Okay, so the price of the stock is at around $29, right? So if we're selling the $30 call, that's $1 away, and we're buying we're selling the 28 put, that's $1 away. The delta is 31 here, the delta is 34 there. So they're probably going to be close, you know, on both of them because they're both a dollar away. All right, so that's how it all works. Hope that helps you guys out. If you have any questions too, just ask, you know, in the comments. And if you don't get something or it's a little fuzzy, let me know, because I want to help you guys out. That's why I started this channel. I want to, you know, go over whatever you don't understand. I want everyone to make money. I'm not charging for this. I just want to go over this with you guys, and whoever wants to learn. I like people to make money, and make money pushing buttons, and not, I work in a truck. I deliver packages all day, okay? It's not, I mean, after I go up 3 flights of stairs 10 times with 30-pound, 40-pound packages, I would much rather just push some buttons on a phone and make money, you know? So that's the way I like to do it. So on the call options, I did sell 2 call options on TQQQ this week, and I'm going to show you that right now. I'm going to walk you through it exactly like I did, but in real time with real money and a real situation. Okay, so check that out, and I'll get back to you. All right. Hey, what's going on, guys? So I'm cutting in on the weekend video. I know you guys are learning the basics about selling these options, selling the puts, selling the calls, and collecting that premium. But yesterday's video, actually today is August 5th, okay? So it's Wednesday, the day after my Tuesday video. And I saw in the comments that some people were saying, what about the TQQQ? So I was selling options on TQQQ, and a few weeks ago, the NASDAQ was down. It follows the NASDAQ. So the NASDAQ was down. I wasn't able to make premium at the strike price that I wanted to put it at. So the past few days, the market shot up, okay? So now it's within range where I can make some money and keep it at that strike price. So I'm going to do, and I totally forgot about it, but in the comments, there was like a couple people, and they're like, what about the TQQQ? I'm like, oh yeah, I got to make money on that too. So I'm going to add some more money to my weekly profits, and let's see how much I can add. So I'm going to go to the TQQQ. I own the shares, so it's covered calls, and I'm going to sell some options on the TQQQ, okay? So let's get to it. We'll go to my Charles Schwab account, and this is good to show you guys, because I know you guys are learning. So when you're selling calls, this is exactly how you do it. So I'm going to sell 2 call options, and this is the exact steps on the Charles Schwab app. If you don't have Charles Schwab, you're probably on another platform, and it's basically the same thing. You just got to figure out that platform and how to do it, but it should be basically the same thing, okay? All right, so here's what we're going to do. I'm going to go to trade down here, and my account just a couple days ago was at like 129,000. Now it's at 136,000, so it's been a good few days. So we're going to go to trade right here at the bottom. This is on the Charles Schwab app, and we're going to go to TQQQ right here. Tap on that. We're going to go up here to the options tab. Make sure it's options and not stock or crypto or mutual funds. So we're gonna sell 2 options. So here's what we're gonna do. There's only gonna be 1 leg here. It's not a roll, it's just a straight up sell. So action right here. There's all these different options that you have, and it's gonna be sell to open, STO. We're selling the option and opening the position, okay? So we're gonna tap on that. How many options do I wanna sell, okay? We will go 2. I'm going to sell 2 options, 2 call options, And what expiration date do I want? I get to choose all this, right? So I'm going to change this to 9 days out, to the 14th of August. That's when the option will end. If it's in the money, I would have to sell the shares because it's a call, covered call. But if it doesn't get to my strike price at the expiration date that I'm choosing, well, then it just ends. I keep the premium and I do it again. Okay, so the strike price that I want to pick is, so here's 74. It puts it at 74 because that's the closest to the stock price right now. So I'm going to tap on that. I'm going to change it. So I'm going to go down. If I tap on it, all these different strike prices come up, and I'm going to go to 84. So right down here to 84, right there. And it's a call, okay? So we got sell to open, 2 options. The expiration I picked was August 14th. The strike price I picked was $84. So if the stock by this date, end of the market, if it was to go above $84, then I would have to sell the shares at $84. The stock right now is at like $74. It's $74.13. Okay, so I'm $10 away. It's got to go up $10 by this date at the close of the market for me to have to sell my shares, and then I'll sell them at $84. So it's a win-win as far as I'm concerned. So what am I looking at here? I'm gonna make, man, it's come down a lot. It was up probably double this earlier, but that's okay. So I'm going to go to the middle here, which is 29 cents. So I'm gonna try 30 cents. So I'm going to bump this up to 30 cents, see if I can make 60 bucks here. So let's go ahead and review the order. That's at 30 cents. 2 options, that would give me $60 because each option is 100 shares. It's in control of 100 shares. So that 30 cents is times 100, okay? So, and then times 2 options. So 30 cents for 1 option would be $30. 2 options, that's where I get the $60, okay? So I'll review the order at 30 cents. And we'll go over here because this is what it's been doing lately. Alright, so I'll retry and then it should go through. So I don't know why it's been doing that, but it works. So I'm going to place the order at 30 cents. I'm going to check the order status, and it's still open. Okay, so we're going to change that. We're going to go to change order, and we're just going to drop it down a little bit. It's at 27 cents now. I'm going to go to 28 cents, see if that goes through. So $56 I can make right now. So review the order at 28 cents and check the order status at 28 cents and still open. Okay, so we're going to do it again. Change the order. Okay, we're going to go down to 27 cents, $54. That's the middle right there. If you see, always go with the middle. You can always change it if it doesn't go through, but you always want to start, normally 95% of the time you want to start at the middle there. Okay, so review the order at 27 cents, $54, and place the order at 27 cents and filled at 27 cents. Okay, the NASDAQ is down today. They always say, you know, people say sell, which is true. They say sell call options on up days because it's surging up. So the buyer likes it surging up because that's how they're going to double their money. It's got to go up above the strike price. So they're hoping it just keeps going. Okay, when it's going down, the premium drops big time on calls. You know, so yesterday when it was surging, it was at like 60 cents. Today it's dropping. It went down all the way, the premium, to what we got, what, 27 cents? 27 cents. Okay, less than half. Okay, so I know I should have sold it yesterday, but I totally forgot about the shares that I had actually. But then until somebody mentioned it in the comments, but I figured, hey, I'll make some money today. I didn't make as much as yesterday, but I'm not. It's not gonna be. I'm not gonna be perfect, you know. So selling it on a down day, yes, it hurts me a little bit, but I would rather have consistency over perfection. Okay, you're not gonna be perfect. It's not. You're going to sell call options on down days. Sometimes it's good if you sell them on up days, but on the puts, you want to sell those on down days. I mean, that's, you want to try, but I don't want to let days go by and then maybe it just keeps going the opposite way that you want it to, and then the time decay too, that's taking away the premium. So you got to just make your decision. With me, I just sell it. I don't care if it's an up day or a down day. I just keep selling, keep premium coming into my account. That's what I want. Just consistent money going into my account. So that's the way I play it. All right, let's get back to the weekend video. Hope you guys are enjoying it. And all right, Weekend Danny, back to you. All right, guys. So did you see how easy that was? I mean, what, $54 in a couple minutes? And look at my Charles Schwab account. I'll show you. See, there's the two options I sold on TQQQ, the expiration date, the strike price, and how much I made, 27 cents, two options. After the fees, I made $53.06 that went directly into my account, okay? So it's just that easy. It's not that difficult, guys. So like I was saying, any problems, any questions, anything you don't understand, just ask me. I want you to make money, okay? That's why I'm here, all right? So if you like the channel, please, if you would, subscribe. That would help me out. Like the video, hit the notification bell, and you'll know when I put out these videos. And I'm here for you guys. So we just did the charity too. That was great. We do that every 3 months, and let's have some fun with the channel. In the comments, we talk to each other. There are a lot of people on this channel that will also help you out in the comments. A lot of great people on this channel. Very good people. So y'all have a great weekend, and I will put out another video on Tuesday, and you'll see all my options that I sell and how much money I make for the week. All right, guys, let's make some money. All right.